What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is October 2nd, Saturday. So, first and foremost, thank you each and every one of you that tune into my channel and watch my videos. For all of you that do like, share it, and subscribe to the channel, it is always 100% appreciated. I don't get paid to do this. This is just a hobby that I like to do. I like playing options and stocks in the stock market. I call my channel the Stock Hustle channel because I 100% do feel that the stock market is a hustle. You are either getting hustled or you are going to hustle and make money. And I think you guys see that from some of my videos. I'm not the smartest or the most intelligent, but I do use the tools at my disposal to make good choices in the stock market to make and produce extra revenue for myself, right? Obviously, as you guys have seen from previous videos, I am an ape. Specifically, I'm a January ape. I got into AMC way back in January before the initial run-up. I did go through the run-up on January 27th and 28th. And then I did go through the fallback down all the way down to when we got to like $5. I held my position. I've been holding my position and adding to it as the months and the weeks and the days go by. And currently, I still hold a significant position of over 2,000 shares of AMC, and I don't plan on selling a single one. Why am I telling you this? Because again, I could easily make videos on AMC every single day, but with YouTube already having content creators that specifically cover AMC every single day, I assume, well, why do I want to add to that pile if you guys are already getting more than enough information on AMC? Instead, what I've taken my channel or focused on is teaching you guys how to hustle in different areas, because obviously there are way more stocks and options in the stock market than just AMC and GameStop. Specifically, how I've been doing, or what I've been doing, is trying to show you guys how to play other alternatives so that you can produce more income for yourself and then take those earnings and take them straight back to AMC and GameStop, which is exactly what I've been doing. It's part of the way that I've been able to accumulate over 2,000 shares, specifically for my portfolio and for my two sons' portfolios, because I do have two young sons, and I do manage their portfolios for them as well, which I plan to gift to them one day here in the future when they are of age. But with that being said, yesterday I did get a lot of questions on Twitter and IG in relation to a play that I posted called MRK, which is the chart you're looking at now. MRK is the ticker, right? As you guys have seen from my videos, I use a tool specifically called Unusual Whales. It is a game-changing tool. Let me be first and foremost, like, I could not appreciate Unusual Whales anymore for giving us this tool, because it will change the way you invest in the stock market. And hopefully this video is an adequate explanation as to why, and justifiable way so that you guys can see how specifically I use it to produce more money. This ticker that you see here did yesterday net me a $700 gain on a $63 investment. Okay, first and foremost, what was the alert? The alert was this: MRK, MRK, October 15, 2021, $79 call. This run up you see back here was not here. Essentially what you see is this here, right? Now, as you see, I got this alert on September 28th at 12:19 p.m. So about an hour, or essentially 45 minutes before the close of the trading day, right? What are some takeaways that you can see right away from this? Well, number one that I look at, volume over open interest. 1600 over 191 is significant. That's a lot of interest that's in this play specifically. Obviously the delta, I want to know how much I'm making with this specific alert. $9 to me, as you guys have seen from my previous videos, I go for delta 0.50 or more. I want to be making at least $50 or more on any option play that I play. And that's not always, that's just my standard, right? That's one of my fundamental rules that I have. And while I'm talking about that, it is important for you guys to have rules for yourself, right? You should always have an entrance and an exit plan for every play or option you play in the stock market. If you fail to plan, that is your plan to fail. And if you haven't heard that before, please make sure you engrave that. You should always have a plan to enter and a plan to exit. I'll get to that, the exit, here in a bit. But I always like to look at the delta, and I like to look at the theta. Why? Delta is how much I make. Delta is how much I lose per day. Options have an expiration. They have an expiration date. You're losing money per day that you hold a contract. There's a lot of variables. It's part of the reason why you see a lot of people on YouTube tell you options are really risky. If you don't know what you're doing, stay away. I am of that crowd as well, but I don't think you shouldn't play them at all. I think you should have decent tools that you trust and believe in that give you conviction to play options is how you can better position yourself to make more money instead of just gambling, right? Because otherwise, if you don't use these tools or you don't have a tool that teaches you or helps you, you are legitimately gambling. You're saying, oh, Nike will hit 150 by Friday. What? Okay, how did you get to that conviction, right? That's the important piece, right? How did you formulate that opinion? Well, I'm going to show you how I formulated my opinion on Merck that made me pull the trigger. So let's go back to the chart. As you guys see, where this green arrow is right here, I received the alert essentially right at noon. What was it? Alert time? 12:19. So 12:19 is essentially somewhere right around here, right? Where this arrow is. I bought the option right where this arrow is. That's the day I pulled the trigger. Well, what were some things that I was looking at when I pulled the trigger? Number one, oh, here, let's do it this way. Nope. There was a low recent that was 70, 75. We were trading above it. Number two, see this news article right here? It says options action, big bullish bet on Merck, right? For 9/16. So I already knew there was going to be some money going into this just from that alert alone. You see the dividend that they did just recently pay out? Normally after dividends, if you're going to hold, people who already have it are just going to hold it. So I knew that wasn't it. So the fact that I see this little run up here tells me there was new buyers going into this. At the point where I bought, we had gone just through a run up. So I knew when I got the alert, something was coming. Obviously, you don't always know what's coming down the pipe. As retail investors, the information we have is super, super limited. So what tools do I have at my disposal to give me conviction? Number one, see this white line? That is a 9 simple moving average, or SMA. Anytime candles are formulating above it, that's a bullish sign. Number two, the green line is a 50 MA. Obviously, we're trading above it, another bullish sign. The yellow line is a 100 MA, or moving average. We were trading above it, another confirmation of bullish sign. And the orange line is a 200 SMA, which is another sign of a bullish sign. You always want to try to pick plays that are trading above those moving averages. Not always, but for the most part, right? If you're entering a position, you should look for these things, right? Again, you should have rules when you make or choose stocks or options to play. As you guys see, anytime that a short-term SMA or MA crosses over a long-term MA or SMA, that is called a golden cross. I have a video on it. Please look it up. It'll teach you all about it. That's another bullish sign. Specifically, on the day, we were in a buying period on the MACD. We were in oversold, so I knew there may be a pullback or there may be a run-up if the catalyst is huge. And the ATR was essentially 39 cents. So I knew it wasn't going to swing wildly up or down at that point, right? We get into Friday's trading day, and immediately, I'll give you guys a better view. We'll go to a 5-day, 5-minute. So here we go. We get the trading day that I bought it, where the green arrow is. And then Friday, or Thursday, excuse me. In the beginning of the day, we have this run up to the top side. Obviously, we are still in overbought, so that was going to have a catalyst effect, or excuse me, the RSI. We're in the MACD. It was essentially neutral. It wasn't really swinging up or down. The ATR did have a push to the upside a little bit, so that's a positive sign as well. But then you see this article right here. What to know about Merck's acquisition of Acceleron. So at this point in the trading day, essentially 2 hours into Thursday's trading day, I figured, okay, so then all this hype behind this play is essentially behind an acquisition. By this point, I had already checked the flow. So this is the flow filtered from the 15th to the 28th. I gave myself a 2-week gap up until I got the alert on the 28th. Well, the first thing I always look at is specifically up here. Well, actually, this is not even the one. It's MRK. I always look up here at the top, specifically to see call premium versus put premium. As you see, there is a huge disparity, 114 million on call side versus 17.2 million on the put side. So that made me even more bullish. When I always go in every video I show you guys on Unusual Wells, I show you the pie charts. What do you see? Mostly green over red. So the calls or the bullish sign is there above the bearish. I always do this expiration breakdown, and what was the first thing that I saw when I checked the flow? For October 1st, we were sitting at essentially 8.1 million. Puts were sitting at 2. So that's a huge disparity in difference. Looking at the next strike dates down the pipe, you see the October 8th, another weekly. Again, calls above puts. And then October 15th, this is probably the biggest disparity, 11 million compared to puts at 2.2 million. So then obviously that gave me more conviction. I went and I always look at the strike date breakdown, or the strike breakdown. The alert was for the 79, which is here at 1.8 million compared to puts at 337,000. If you look at the 77.5, it was 4.9, and then the biggest was the 75 at 9 million, right? Compared to 2 million on the put side. That was another sign that gave me more conviction by the time I had already bought the play. This is initially when I saw it and I got the alert on the 28th. Some of the first things that I look at gave me conviction, right? So about the option, obviously, if you guys saw yesterday on Twitter or on IG, I didn't buy the alert $79. I always like to give myself more room on Delta because I want to be making more money in case of a run-up. Yeah, I'm going to pay a little more. Instead of paying the $15 to $17 for this specific expiration at the 79, I went with the 77 and I paid $63 for this contract. As you see, I did produce an 856% increase, which gave me a little bit over $700 when I sold. So we get into this Thursday. I figured, okay, we're in acquisition, and then here at the end of the day, about 1 hour after trading, antiviral pill could make COVID manageable, right? So at this point, when I saw this, keeping up with my plays and researching them, I was like, okay, well, maybe it's pharmaceutical related. There was no possible way I could have known any of this was coming, or that they were going to release this article at 3 in the morning, which you see here. COVID-19 antiviral reduced hospitalization rate in unvaccinated. That it's working. It's a pharmaceutical that does work against COVID-19. Once this broke, specifically in the afternoon, you see this run up essentially here at 2:35 in the morning. Well, if you look at the flow, this was up until the 28th. There was already $114 million going into this on the call side. So somebody knew something that others didn't. And this isn't little money. 13,000, 13,000, 30,000. You see the amounts of money. It's a significant amount of money going into this play. So that is part of the reason why what gave me conviction. Looking at the chart, knowing fundamentals of the chart, using the tools that I have, but especially more than anything, unusual whales, right? Again, I don't work for them. I don't have an affiliate with them. I message them from time to time on Twitter, giving them appreciation for producing this tool because it did change the way I specifically invest and how I choose and pick options, right? I often quote them. If you guys are interested in having them, I would strongly encourage you to, as it will 100% change the way you choose to invest in the market. It has for me. Again, the reason the channel is called Stock Hustle is because you're either going to get hustle and someone's going to take your money, or you're going to out hustle them and make way more money. And as you guys can see, from the very first trade that I ever made using unusual whales, I was producing money. And to this day, 9 times out of 10, I'm producing money over losing money. Again, in options, you're not always going to make money on every single option. But my percentage of winning versus losing has dramatically increased to the win side. I think you guys get the point, what I'm trying to imply or explain with this video. But if you guys still have questions, as always, please leave them down in the comments below. Don't forget to like, subscribe, or share the video, as it is always 100% appreciated. And I will catch you guys in the next one.